Hello and welcome. You're watching Crypto Classroom here on Money 9, and I am Krishnakumar, and we are having this discussion on cryptocurrencies after that massive crash yesterday that witnessed the erosion of so much of investor wealth. To understand what should be the ideal regulatory framework going forward so that such crashes don't happen, such volatility doesn't exist in cryptocurrencies, and more importantly, investors' wealth is guarded, investors are guarded, and investors are looked out for. To understand how it needs to be done, we have with us Mr. Secy Garg, who is the former finance secretary of the country and also the head of the interministerial panel on cryptocurrencies in India. Thank you so much for being with us, sir. We also have Mr. Varun Sethi of Blockchain Lawyer joining us. Varun, as always, a pleasure having you here on Money 9. I'm going to begin by asking and talking about that crash yesterday. Every single time there's such kind of volatility, be it a sudden surge or a crash, there's always this conversation about, should you even be able to trust this currency, this kind of a currency or not. Mr. Secy Garg, what comes to my mind at this stage is that doesn't yesterday's crash, make it obvious that there is an urgent need for a regulatory framework for cryptocurrencies in India?
See, the regulation of crypto assets, and I'm excluding the currencies part, which is not a permissible thing at all. So the crypto assets, by its very nature, is a very volatile commodity or asset, and there is no real value. The prices surge and the downfalls are determined by demand and supply kind of situation. So if the demand is sparked up by the corporates, Teslas and others, for whatever reasons, then they sudden surge on account of that demand. If on the other hand, something different happens, that you dump it, the sentiments go down and therefore the crashes take place. No regulation, in my judgment, can prevent these fundamental attributes of the asset. So but what regulation can do is to sort of protect the parties who trade into it or who invest into these assets. And therefore, regulation of crypto assets is, in my judgment, necessary for investor protection rather than sort of preventing the busts and the booms in the currency.
Right, I see Varun nodding along. I'm guessing, Varun, you concur with Mr. Garg completely.
I think we are looking at the digital assets, or as rightly pointed out by Sir, that these are not cryptocurrencies. I also term it as crypto assets only. So from that perspective, these crashes, I think, should not be looked into from a comparison perspective from stock markets. Stock markets are highly regulated markets. These markets, crypto assets markets, are 24/7. They are global. Even one news elsewhere in the world, they can massively change the prices. I think what these crashes teach us is that the current state of the crypto asset market is more centralized than what we think. So one tweet from Elon Musk saying that, okay, Tesla is now rethinking its strategy of accepting Bitcoins against the sale of cars can bring down the entire market. So from that perspective, yes, it goes to show that it is still a more centralized market than what we think. But it also goes to show an important aspect that just like there are circuit filters in stock markets to ensure that the investors' wealth do not get downgraded after a certain time. Similarly, these kind of crashes may not be fully controlled because of the very nature of the asset, but we've seen spikes of 1,000% in smaller coins. I think a regulation, something which is very similar, we see Wyoming in US, Singapore also working, whitelisting certain exchanges, wanting a legal opinion before listing a coin on a certain exchange. Those are the kind of steps that are needed for bringing in more investor protection in this industry.
All right. I also wanted to ask Secy Garg that you were heading the interministerial panel on cryptocurrencies in India. Now there's a new panel being formed. Why has there been this delay in coming up with a regulatory framework for cryptocurrencies in India?
See, in 2019, when the panel headed by me had made that recommendation and suggested a draft law, the dominant concern at that time of the regulators in the government was that it's getting used as currency in the payment system. So the RBI was also sort of concerned about the use in the payment system. Government was also concerned about it. The asset part was much less in the horizon at that time. And the recent crash, which you saw in last 2 days, is also partly attributed to the Chinese decision of not allowing the cryptocurrencies for the payments purposes, which is as currencies. And therefore, the inseparable nature, it's a very difficult commodity or asset right now, where it's difficult to separate the currency part and the asset part, leads to regulatory problems. And I think that 2019 committee report, since it did not deal with much on the asset part of it, I think the new panel, we don't have the access to the terms of reference to it of this panel, and therefore we don't know exactly. But I think it would be quite good in the public interest if this new panel deals with the crypto assets part of the system, and also the underlying
Right.
blockchain technology, which can be used very well in issuing of the capital, of providing a lot of services, and the like. So I think these two aspects. The second aspect was attended to it, but it was left open that we should only encourage. But now we should bring some regulation to deal with that aspect as well. So I hope this panel will attend to these two issues as well.
Varun, if I were to ask you, what should be an ideal regulatory framework in India for cryptocurrencies consisting of, in terms of who should be the custodian? If those were the questions that were asked of you, what, according to you, would be the answers? Should it be the SEBI that's regulating cryptocurrencies? Should it be the RBI that's regulating cryptocurrencies?
I think it is a three-step mechanism. We've analyzed how other nations have evolved. They have made their mistakes. There's no doubt about it. We saw smaller nations like, say, Malta, initially encouraging it and then retracing back its steps. So those challenges have been there. Similar challenges with Estonia as well. Now, what I feel is that there are three nations who are actually doing lots of things right. Of course, excepting Japan, where it is way more elaborate. Of course, the economy also is more mature. Now, three nations, or I would say three locations. One is Wyoming in US, second is UK, and third is Singapore. Primarily, these three locations is where you find most of these activities and most of these developments, especially from a regulatory perspective, happening. Why are we saying this? Last year, 13 blockchain laws in Wyoming in US were passed, and these are now officially shown up on the website of the Wyoming state, which goes to show that they are recognizing crypto assets as digital assets, and they are clearly defining what means custody, what does not mean custody. This is what you can do, this is what you cannot do. Secondly, in UK, the HMRA, which is sort of equivalent to the tax authority of India, has come up stating that you can consider this as a capital asset, treat it, however, as Sir rightly pointed out, that it should not be construed as a payment system because that is a sovereign function. And it is very clear in India that the sovereign function can happen only through the works of RBI. No person can simply say that, okay, I'm starting accepting cryptos as a means of payment. However, we should not miss out on the opportunity what Singapore did. Singapore very nicely came up with this Form 1 last year, stating that if you have a certain, say, a coin which you want to get listed and you want to sell it to Singaporean citizens, then you need to go through a rigorous mechanism, getting a legal opinion from a local Singaporean lawyer, stating that this coin is a utility token and these are what this token can do, and it should not be a security token. And only after whitelisting that token does it get listed. Other than that, everything else is illegal. Also, it came up with a potential digital asset token offering guidelines. Now, those are legal literatures that can be drawn inferences. India also should not miss out on these innovative technologies. Even though these crashes, of course, these are things which are sort of, as a new asset class, would throw up challenges to the existing regulators. But I still feel that these are opportunities for the young Indian fraternity to develop something on using blockchains, using digital assets, but very clear, should not be used as a means of payment. Now, whether RBI is the right authority, SEBI is the right authority, I think let's leave that question to the authorities. That's a good headache to have, I think, given the fact that lots of good things can be built. I hear a news, may not be verified, but I hear a news that Mumbai is now using Matic blockchain network to put the details of code reliefs on blockchain. So that can be good use cases in times to come.
See, there are two complications.
Right, Mr. Subhash, if I were to ask you, I should have asked you that question first. If the toss-up is between the RBI and the SEBI as to who should be the one regulating cryptocurrencies in India, what would be your response to that question?
See, before I come to that question, I think what Varun was saying, there are two specific complications which we should keep in mind whenever we design a regulatory framework for crypto assets and talk about that regulatory framework for India. See, India is not on capital account convertibility. All the instances which Varun was referring are from the countries which have capital account convertibility. It doesn't matter if you buy, you transfer your your holdings to outside country, you bring in, take loan. All these things are permissible in the capital account convertible countries. But it's not permissible in India, which doesn't allow which has only a limited capital account convertibility. Whenever you trade or you buy, let us say, a crypto asset, and if the other side, that money might go outside the country, and then it becomes a capital account transaction. So when we design a framework for that, we will have to keep it in mind. How do we take care of this aspect? The second aspect is that, which I referred a little bit earlier also, there is an inseparable nature between the currency part and the asset part, at least for the internal payments within the crypto asset ecosystem. Right. So if you are using Ethereum, so you make payment in Ether, and so even for availing those services, everything. Now, so this brings a limited aspect of currency. So while for public currencies, you might still be able to somehow ensure that the cryptocurrencies is not used. It's difficult. I must say it's not easy. But for the internal use, this will have to be perhaps recognized that this will be permissible. If it is not permissible, then the whole blockchain-based system goes down. So this will require a major departure in sort of use of cryptocurrencies or assets as currencies also. I think these two aspects are something. Now, in terms of who should regulate, I think the capital account convertibility aspect is the Reserve Bank, and that is where the monetary and the currency aspect is. But the assets are regulated by the SEBI. So it may not actually be necessary to have one regulator. So today, for example, if you look at the debt, so debt, a lot of aspects of debt are regulated by the Reserve Bank, but debt as a security is also regulated by the SEBI. So when we design an appropriate regulatory architecture for the crypto assets, taking into account its specific nature, maybe either we may have to come up with a new, or maybe some aspect of the regulatory sort of jurisdiction will be with different regulators. It may not be necessarily be with one.
A regulator. I want to, before we let go of this discussion, one last question. What about this CBDC, central bank digital currency? Where would the arrival of the CBDC leave the banks and the banking system in the country? If I were to ask you, Mr. Subhash Garg.
See, the CBDC, or let us say the digital rupee in the context of India, will definitely be sort of issued by the Reserve Bank. There are both the routes possible. Theoretically, Reserve Bank can issue the digital currency to the citizens or the public directly, bypassing the banks, or it can route the currency, even the digital currency, via the banks. So, like China is routing the digital currency via the banks, they are not releasing it directly to the public. So, it depends upon which architecture you want to adopt. In my judgment, since the intermediation function and the credit creation function is done by the banks, it might still be advisable to sort of disseminate the digital currency also via the banks rather than directly. It will also save the Reserve Bank to maintain billions or millions and billions of the account directly. I don't think central bank is into that kind of business. So it's a much deeper question, and what kind of choices you want to make it. And I think we will have to leave this to the development of the CBDC or digital currency in the country.
All right, I'll get one last word on CBDC from Varun, and then we'll wrap this up. Varun, quickly.
Surely, I think CBDC, whenever that word comes up, we generally talk about digital yuan, but we are missing out on one small country, which is
Varun.
Okay, so whenever we talk about CBDCs, it's generally that we talk about digital yuan. However, there is one country that we are missing, which is a smaller nation only, but Bermuda has come up with its guidelines. And even though it's a smaller nation, we can draw some inferences from there. I still feel that it is work in progress. CBDCs should not be just pushed out because it will directly impact the general population of the country. We can still, as Sir pointed out, we can still look at aspects of pushing these technological developments through existing architecture of Reserve Bank of India itself, through banks itself, and not directly on a P2P basis. So with those solutions in place, I still feel that CBDCs will do more good in the long run than what the current restrictions of the money flow, physical money flow is doing.
All right, we will leave it at that. Mr. Subhash Garg, former Finance Secretary, and Varun Sethi of Blockchain Law. Thank you, both of you gentlemen, for taking time out to be with us here on Crypto Classroom on Money9. And thank you, all of you, for watching this. Stay tuned. Keep watching Money9. This is Krishnakumar signing off.
Thank you very much.